All right, bro. So, welcome to the final chapter of our cryptocurrency guide. Uh, we have been on a very long series, right up from last month, and finally, we're rounding up the chapters on cryptocurrency, a practical guide for beginners. Now, what to learn from this basically, we have been discussing about crypto trends, what cryptos to trade on, the best cryptos currently in the market, and we are able to understand that a couple of people are still finding it difficult, but definitely you can still go through our videos again. They're very explanatory, and momentarily you understand every bit of what we're talking about as regards trading cryptocurrencies. Now, today on the final chapter, we'll be talking about future trends in cryptocurrency trading. We'll be looking at evolution of the cryptocurrency market, also be focusing on potential regulatory charges, and finally preparing for the future of trading in general. Also, cryptocurrency trading, you can also add that to it. Now, let's begin. Next page. Future trends in cryptocurrency trading. The world of cryptocurrency is rapidly evolving and it has been shaped by technological advancements, right? Regulatory charges and the ever shifting demands of global markets. You know, as a trader, you're staying ahead of these trends is essential to maintaining a competitive edge and maximizing your potential profit in this chapter. Now, we will explore some of the most significant future trends in cryptocurrency trading, including the rise of decentralized finance, DeFi, and the impact of non-fungible tokens, the NFTs, as well as potential regulatory developments and emerging technologies that are poised to reshape the landscape of the cryptocurrency market. Now, the evolution of cryptocurrency market has come a long way since the inception of Bitcoin in 2009, and what began as a niche market has grown into a global financial ecosystem with billions of dollars in daily trading volume. As the market matures, we have several key trends and are expected to, define its future trajectory. And also we have increased institutional involvement, institutional investors, including hedge funds, assets managers, and even traditional banks, which are increasingly entering the cryptocurrency space. Now, this trend is likely to continue bringing greater liquidity, market stability, as well as legitimatization to the country. So these things are very, very important for us to follow through and understand them basically, because they all have to do with the future trends when it comes to trading cryptocurrency. Next page. Then we talk about market maturity. You know, the development of cryptocurrency derivatives and ETFs, exchange traded funds, are going to further attract institutional capital, thereby providing more and more opportunities for both the institutional and the retail traders. Now, when we talk about market maturity, as the market matures, we definitely can expect to see some reduced volatility and a shift towards more stable price movements, particularly in established cryptocurrencies like the Bitcoin and the Ethereum. Now, the growth of stable coins, which are pegged to fiat currencies, will also contribute to market stability and produce traders with a reliable means of transferring value within the crypto ecosystem. Next page. Talking about potential regulatory changes. Now, regulation has always been a double-edged sword in the cryptocurrency world. While some view it as a necessary step towards mainstream adoption, others, see it as a potential threat to the decentralized nature of digital currencies. And regardless of one's stance, it's clear that regulation will play a significant role in shaping the future of cryptocurrency in trading. We talk about global regulatory harmonization. These things like cryptocurrency gain global traction. There will be likely efforts, to maximize regulations across different jurisdictions. And this could lead to the creation of international regulatory standards for cryptocurrencies, exchanges. We have wallets and different trading activities. Now, the implementation of these standards will reduce regulatory arbitrage, where traders will move their activities to jurisdictions with more lenient rules and create a more predictable environment for market participants. Now, we talk about increased scrutiny of privacy coins. Privacy-focused cryptocurrencies such as the Monero, Zcash, they have come under increased scrutiny from regulators, and this is obviously due to potential use in illicit activities, because future regulations may try to impose something like, let's say, stricter requirement on exchanges that list these coins or even ban their trading algorithm altogether, right? Next page. So now, we understand that traders should be aware of the potential risk associated with trading privacy coins. We need to consider diversifying their portfolios to include assets that are less likely to face regulatory challenges. Then we talk about KYC and AML compliance. Know your customer and anti-money laundering regulations are expected to become more stringent, requiring traders to provide detailed personal information before accessing cryptocurrency exchanges. While these mature measures are intended to prevent illegal activities, they may also reduce the anonymity that has been a hallmark of cryptocurrency trading. Now, we have compliance with KYC AML regulations, which will become a standard practice, and traders should be prepared to provide the necessary documentation to avoid a disruption to their trading activities. Then now we talk about non-fungible tokens, fungible tokens, I mean to say. The NFTs, non-fungible tokens, represent ownership of unique digital assets such as art, music, let's say virtual real estate. And on the blockchain, while initially popular in the art and entertainment sector, NFTs are increasingly being used in gaming. We have virtual worlds, and even as collateral in DeFi platforms, the NFT market is still in its early stages, but it represents and presents significant opportunities to traders, who can identify valuable assets early. However, the market's speculative nature also carries risk, and traders should approach NFT investments with as much caution as possible. Next page. Then we talk about interoperability and cross-chain solutions. Now, as the number of blockchain network increases, the ability to transfer assets and data between different chains interoperatively will become very crucial. We talk about cross-chain solutions such as Polkadot and Cosmos are already working to enable seamless communication between blockchains. Now, traders will benefit from these developments by gaining access to a broader range of assets and opportunities across multiple networks without being confined to a single blockchain ecosystem. Then we speak of preparing for the future of trading. The future of cryptocurrency trading will be shaped by these trends as well as by innovations and development that we may not yet foresee. And to prepare for this future, traders should focus on the following strategies. We have one, adaptability, which is the ability to adapt to new technologies, market conditions, and regulatory environments will be very crucial for long-term success. Traders should stay informed about emerging trends and be willing to adjust their strategies as needed as possible. We speak about diversification, diversifying across different cryptocurrencies, asset classes, and trading strategies will definitely help mitigate risk and increase the likelihood of capitalizing on emerging opportunities. And this includes exploring DeFi's, NFTs, and traditional assets like stocks and commodities. So very important we focus on these things and try to understand how they possibly can relate in our cryptocurrency trading. Next page. Continuous learning. This can never be overemphasized because the cryptocurrency market is always constantly evolving. And traders must commit to continuous learning to stay ahead. And this includes understanding new technologies, regulatory changes, market dynamics, as well as refining technical and fundamental analysis skills. Then we also speak about building a resilient portfolio given the volatile nature of cryptocurrencies. It's essential to build a resilient portfolio that can withstand market fluctuations. This obviously involves setting realistic goals, maintaining discipline in trading, and managing risk through position sizing and stop loss strategies. The cryptocurrency market is on the cusp of significant changes driven by technological advancements. So regulatory shifts and the growing involvement of institutional players by staying informed, adaptable, and committed to continuous learning. So traders can position themselves to thrive in this very dynamic environment. The future of cryptocurrency trading obviously holds immense potential, and those who are prepared to embrace these changes will be well equipped to capitalize on the opportunities that definitely lie ahead. Next page. In conclusion, cryptocurrency trading for beginners, you must have traversed the traditional concepts, strategies, and insights necessary to begin your journey as a cryptocurrency trader. But here's the juice. The world of cryptocurrency is very dynamic and fast-paced, offering immense opportunities for those willing to learn, to adapt, and as well persist. So from understanding the basic of blockchain technology and popular cryptocurrencies to mastering technical and fundamental analysis, you have to have a built strong foundation. You must have learned about risk management, the psychology of trading, and how to approach the market with a very disciplined mindset. And the case studies of successful traders provide real-world examples of how diverse strategies can lead to success. While the exploration of future trends equip you with the knowledge to stay ahead in this very evolving market. So cryptocurrency trading is not a get-rich-quick scheme, but is a skill that requires dedication, continuous learning, strategic thinking, and the market will continue to evolve, presenting new challenges and opportunities as you continue on your trading journey. Remember the importance of staying informed, being adaptable, and managing risk effectively. So the knowledge you have gained from us is just the beginning. Use it as a springboard to deepen and sharpen your understanding, refine your strategies, and explore the endless possibilities that cryptocurrency trading really has to offer. So whether you're looking to trade part-time, or you're looking at how to make it a full-time career, or simply to invest in the future of finance, you now have the tools to begin very confidently. Next. So the road ahead may be challenging, but with the right mindset, the good guidance, and a commitment to continuous growth, you have the potential to succeed, I must say, in the exciting world of cryptocurrency trading. So that'll be all for us in this final chapter of cryptocurrencies. We will be sharing all the PDFs from chapter 1 down to chapter 9, today's ending chapter. So if you need them, you just shoot me an email at akabog.nicholas@ztraders.com, or you can text me on WhatsApp +234-8081388665, and I will send you the PDF for you to go through it again. And if you have questions, of course, feel free to reach out to me. So that's all for today. Thank you.